Good morning and happy Monday. Welcome to the Rick Helps Real Estate morning live stream where we look at new numbers for the week or for the day. And we take a look at the numbers so that we don't get surprised by anything. You're going to start seeing a lot of headlines and they're going to be wild this month. And they're going to be wild because they're comparing them to last month when everything was shut down. So you're going to see real estate numbers that are crazy. You're going to see economic numbers. GDP's up by this much, roaring 20s. Here we go. You're going to have to take it with a grain of salt. If the economy's growing, and it is, they're comparing it to when we were all shut down. So we're going to be looking at those numbers pretty closely. Today, we have 4,699 homes on the market. So if you've been following this channel at all, then you know that that's just kind of where we've been hanging. And so I was anxious to look at what the numbers would look like this morning on my 7-day moving average, because now it's not going to include Easter Sunday, but it's still going to take a few days for that to shake out because there were a lot of contracts written on Easter Sunday, a lot of traffic, but not as much. And what I'm going to show here is, I'm going to send this right over. The blue line is new listings that are on the market, and the yellow line, golden line here, are how many went under contract. Now, this is an encouraging sign. Notice how the blue line is above, so it's even greater, the difference between the two, but you can see that under contract starting to creep back up. Now, it's easy on a chart like this to see that it looks like a big change, but the numbers are so small. You know, you've got 4,000 coming on, 4,000 going under contract, that if you have a move by 400 homes, 400 contracts, it looks big on the chart. So while that's an encouraging sign, you know, we want the blue line to be above the yellow line. It's not a trend yet, and it's a very, very slow trend at that. And if we go and we look, and I'm going to kind of cruise the news here for a second, and I want to show you some things. The Cromford report, again, is saying there was little change in the nature of the demand during March. We can see this by examining the intended use recorded on the affidavits for value. In other words, people are buying the house for themselves. Are they buying it as an investment? And they're comparing this March to last March. Remember, last March we were shut down. So unit sales were up 29.3%. Sales per owner occupancy as a primary residence were up 12.7%. That's not a huge number. But look at this. Sales for use as rental property were up 52.1%. And second homes up 36.2%. A lot of investor traffic out there, folks. Boy, that's unusual. March 2021 had 4.5% more closing days than March 2020. So all these high numbers should be shaded by that fact. But it says here, by itself, this is not a huge development, but it's a new sign that the market may be starting to get a little frothy, you think? And I'm going to go over some of that in a minute. Primary residence purchases are the backbone of the market. And we don't want to see the market dominated by other buyers when we are looking for a home. So we don't want the market to be dominated by investor traffic and pushing us out of the market. Maybe that's what Fannie and Freddie were saying when they told investors to limit their portfolios to 7% of non-owner occupied homes, huh? Maybe that's the number they were looking at. Now, the other thing that they're looking at that we talked about the other day was the forbearances. You know, our forbearances are what's going to crash the market, right? And I think it's the most misunderstood thing now for people talking about where the real estate market is headed. Here's a classic example. Because the forbearance was moved and they said at the end of the year, we want to give you time to rewrite these loans. Oh no, the housing crash was canceled. That's ridiculous. There wasn't going to be a housing crash anyway. Forbearances do not mean there's going to be a crash. I can't stress that enough. Are there other things that can happen to us that can cause a crash? Yes. Yeah, there are. I mean, but it's all going to be financial, and it could be in banking in general. But, you know, that's what we're going to talk to Sam DeGreen about tomorrow morning. He's with DeGreen Financial, and I really want to I really want to drill in and see what he has to say. It's nuts out there right now, and I don't feel good about it because I think it's getting out of control. And I mean, I wrote an offer yesterday, and I just asked the agent, we didn't get it. And I just asked the agent, can you tell me what it was that, was the deciding factor? Was it price? Was it terms? Was it closing date? Was it my bad spelling? I just wanted to know. She gave me a generic answer, and it was just like, he went with one that had terms that he liked. Well, that doesn't help me or my buyer at all. Tell me what it was. It's okay, agent. You can be honest. I can take it. So as we look at interest rates going forward, and this is interesting to me, and again, this is something that I want to talk about tomorrow with Sam DeGreen, and that is that when the market is doing well and the economy is going good, rates will go up. So all the numbers that you're seeing right now compared to March are showing that we're taking off like crazy, but it's interesting to look at the 10-year Treasury right now. Because here's the charts right here. The 10-year Treasury yield has got like a sideways range to it. It's not going up. Fed Chairman Powell this last week, made a statement, well, actually over the weekend, made a statement that, remember, he has said we're not even thinking of raising interest rates till probably 2023. Now he makes a statement yesterday and says, well, we're not ruling out that we won't raise rates this year. What? I mean, that's a huge breakaway from what he's been telling us. And yet we're looking at the data and we're seeing that the Treasury market's still kind of going sideways, waiting for the numbers to come in. This means interest rates have actually started to come down a little bit. At least the fees associated with getting a mortgage are starting to improve. So that's a good sign. And I think that we're not going to see rates come plunging up. I've got here, it said the live stream was breaking up. I hope it's solved its problem. That's kind of a latency issue with the World Wide Web. So if that's breaking up, I apologize. I don't have a button on my end where I can fix that. So here's where the market reminds me of right now. I'm going to reach down and get it. Toilet paper. Remember that mess just a year ago? You couldn't find toilet paper in a store anywhere. Well, you couldn't buy soup. You couldn't find anything. Everything was cleaned out. And people were panicking about it. They were willing to spend anything for toilet paper. There were lines in Costco, and they would only let you buy 2 rolls at a time, 2 packages, or 1. And it was rationed. And there was just this irrational exuberance for buying toilet paper. And people were yelling at store managers saying, well, why don't you just order more? Well, mills can't just produce more toilet paper. They can't double and triple their production in a week. It's made from trees, and it takes time. So we had this supply side issue with all toilet paper out there. It was tough. You couldn't get it. And it was supply and demand. There was a huge demand for toilet paper. There was no supply. Did you see any toilet paper on sale when you go in the store? The little sign that says $1 off? No, because they didn't need to do that. They didn't need to do that with bread either. All bread companies didn't have to have their bread on sale because they were running out every day. There was a problem with supply and demand. That's what we have going on in the housing market right now. Supply and demand is so out of whack that the offers that are going on out there are very distressing. And I think we're reaching a breaking point. When I say breaking point, I don't think we're reaching a crash, but we're reaching a breaking point where consumers are starting to make poor decisions. And I'm going to read one of these poor decisions here for you now. Take a look at this. It's just one line. To increase their chances of being accepted, some potential buyers are including a signed BINSR with their offer, foregoing the right to withdrawal if anything unexpected is found during the inspection period. Does that look like a good idea to you? Foregoing your inspection? Right off the bat, you're sending in the offer and they're already doing appraisal waivers, saying, look, if you're asking $600,000 for your house, I will offer you $650,000. But if it doesn't appraise for $650,000, I'll make it up. I got buckets of cash. Now they're saying, here's my offer. Oh, by the way, I'm just going to buy it as is. Don't sweat it. That's dangerous. When you start seeing those types of things happening, I think that tells you you're at the top of the market. I don't think it tells you you're going to crash, but I think It just doesn't smell right to me. I don't have the economic data to tell you how things are going to change, but just from a real estate agent, this looks kind of fuzzy. Now, as a real estate agent, we're not economists. I talked about this before. Our job is to manage you through the minefield of regulations. There's a lot of forms. There's a lot of things that can really trip up a transaction. And it's all about the wording. So if you're trying to sell a house on your own right now, you got to be very careful. You got to be very careful on how that offer is crafted so that you can sell your house without any hiccups. So I recommend getting an agent, and you can negotiate the commission. There's a lot of that changing right now. The average isn't 6% anymore. It's 5 or lower, and that can happen. It drives me crazy on social media to see agents going, I got above list and sold it in a day. Well, yeah, you did. Everybody's doing that, but when I take a look around and I look at let's just take a look at what's going on here. This is the East Valley here, 4 bedrooms, 2.5 bath. There's 31 homes. So that's not a lot, right? But what I wanted to do was I wanted to look and say, what was their asking price and what was the closed price? Now, keep in mind that these are contracts that were written 30 days ago, and it's worse now. So contracts are written 30 days ago. Now they show up as closed. That's when we get to go in and look and see what was their asking price and what was their closed price. And here's an example right here. Their asking price on this one, original list price, $535. It's down here on the bottom. I apologize, kind of small, hard for you to see. The sold price, $605. $535, and it sold for $605. This is the number that I'm seeing right now everywhere in that 500,000 to 600,000 range. You look at a home and it's $595, it's going to go for $650. And that is a huge change from last month, and that's what we're seeing. It's just brutal. Let's go down here on Rockledge Drive in Phoenix. So let's see, zip code 85044. Let's see what happened to this one. This was a month ago. So they had a list price of $599, went for $646. So looking at the list prices out there, folks, if you're coming in from out of state and you're looking at something online and you're seeing all these homes out there for $595, be prepared. They're going for way more than what you're seeing. Be prepared. And people are, save some of your powder, because you're going to have to put in some of these appraisal waivers. And those can get dangerous. So there's a lot of that going on right now. And but here's some good news for you. The Realtor.com compiled the list of most affordable places to live. Great Falls, Montana. Rapid City, South Dakota. Schenectady, New York. Have you been to Schenectady, New York? I used to work out there. I can give you several reasons why it's affordable. Notice it's mostly all the cold states. Taylorsville, Utah, with the occasional one down here, Harrisburg, Virginia, and Savannah, Georgia, quite warm. But it's all in these cold states. So those are the top 10 right there, boy. If you want to find something affordable, that's where you're going to go. I think that's to be expected. But, we're looking and saying, well, where it used to be, just go to Tennessee. You can afford that. Now Tennessee's getting priced out like crazy. Boise, Idaho, not anymore. Not anymore. So tomorrow we're going to be talking to Sam DeGreen. I want to get a great big picture of what's going on from high above where they see things economically, because the inflation numbers we're seeing right now, are they just temporary inflation numbers because of the supply side issues, or are they seeing things bubbling up that we're going to have inflation roaring next year? Because a lot of this stimulus money is not really making it into the economy like people think it is or think it's going to be. So I'm a little skeptical about that. I'm skeptical by nature. So tomorrow's the day. Tune in at 8:30. We'll take a look at the numbers. And as we look at the effect of Easter, I want to see if that blue line continues to stay above the yellow line, because I'll take any glimmer of hope that I can see right now. It's a very frustrating time. I say don't give up. If you really need to get a house and stuff, you can get one, but you just have to keep swinging and keep swinging until that happens. Until then, I'll see you tomorrow. Have a great Monday.
Bye.